And I, Robin,
from the Department of Management and Commerce at Trinity Institute of Professional Studies, Dwarka, extend a heartfelt welcome to the dignitaries present among us. Our esteemed speaker of the day, Dr. R.K. Tandon, Chairman Tips, Dr. Varkha Behel, Director Tips, Dr. Dipali Saluja, HOD, Department of Management and Commerce, faculty members, and my dear friends. Thank you all for joining us in today's National Symposium on Sectoral Analysis of Union Budget 2022 to 2023. Light symbolizes brightness and prosperity. It removes the forces of darkness and gives us positivity. In this spiritual world, light means life.
So we also think of light as giving us a new direction in this life. With this noble thought, let's start our day with Saraswati Vandana. A budget is more than just a series of numbers on a page. It's an embodiment of values. Considering all the aspects from expenditure to investment, a budget is the guide, that path that shows you the path to make better decisions and know how to utilize all the resources in an optimum way.
And to address the same, Trinity Institute of Professional Studies has organized the National Symposium on Sectoral Analysis of the Union Budget 2022 to 23. Today's session will help students to gain insights into the economic growth, taxation, and education sector of our country and the upgradation of knowledge in a holistic way. Everyone has heard the term budget, right? But a few people know about its working and current scenario. This symposium will help students to know about the current scenario and will provide us the information about the detailed sectoral analysis of the union budget.
With a vision and mission to transcend the boundaries of education at Trinity Institute of Professional Studies, we strive to groom future leaders who are not only thorough professional, but also good human beings with values. Our institute aims to achieve this through guidance, research, academic passion, practical industry-oriented teaching, and external exposure to students. With the help of experienced and distinguished faculties and state-of-the-art infrastructure, the institute has been home to brilliant students and a number of accolades. A series of eminent lectures, seminars, personality development sessions, and other value-adding courses are being conducted under qualities assurance cell. Through these sessions, we are making an effort to inculcate leadership qualities in students and to help them groom into successful leaders. Moreover, students have brought laurels to the institution by bagging gold medal in various competitions and have been placed at companies such as TCS, Google, Byju's, Paytm, Amazon, and etc.
Guru Gobind Singh Indraprastha University is a state university established in the year 1998 by the government of Delhi, which is located in Dwarka, Delhi. University runs almost 50 courses and more than 120 colleges are affiliated to it, which runs according to the rules and regulations set by the university. Trinity Institute of Professional Studies was established in the year 2007 and holds 5th position in the university. Since then, it has been promoting quality education and fostering academic excellence. Courses offered at Trinity are BBA, BCA, BA JMC, BCom and BA LLB. During the pandemic, Trinity Institute of Professional Studies took the initiative and shifted to online platforms for conducting classes. A number of guest lectures, webinars, and online workshops for the students as an addition to the regular course. TIPS also used a hybrid way of teaching learning process where students were called in small groups for doubt sessions and practical assignments. No matter what the outside situation was, TIPS didn't stop working and tried always to help the students to learn and grow without any loss. TIPS has state-of-the-art infrastructure. The BGMC department has a well-equipped video studio and production controlled room with teleprompter, different types of lights, audio and video switcher, and HD still and video cameras. The institute also has a fully air-conditioned audio studio for audio recording and for radio journalism with talkback system, Yamaha speakers and Yamaha audio console and various recording equipments. In the post-production lab, budding editors can access Apple iMac machines with FCP and Adobe CC professional softwares. The library at TIPS is a comfortable getaway from the noise and hustle of the campus for students and faculty members alike. TIPS has 3 well-equipped computer labs with 175 computers with the latest and updated softwares like Adobe Family, InDesign in C++, Visual Studio, Java, Oracle and Tally 9.0. The Department of Law is equipped with a moot court. It is used exclusively by law students for mooting practice and to conduct moot court skills development workshop. The institute organizes TIPS eminent lecture series with esteemed speakers like Mr. Vikramjit Banerjee, Senior Advocate and Additional Solicitor General, Supreme Court of India, Mr. Pradeep Bagchi, Senior Journalist, The Times of India, and Mr. K.G. Suresh, Senior Journalist. TIPS also organized online lecture series during the pandemic. Eminent guests like Mr. Pradeep Menon, a Dubai-based photography expert, Mr. Subhendru Ghosh, anchor and correspondent on DD News and DD India, also came on board and shared their valuable insights with the students of journalism and mass comm. The institute has initiated Celebrity Talk series from last year for students to interact with experts in the field of filmmaking and media communication skills. Recently, Ms. Flora Seni and Ms. Leila Panda were in the campus. Various workshops, life skill sessions, counseling sessions, alumni interactions, eminent lecture series, value-added course, industry visits, seminars, and conferences are being conducted on regular basis to provide practical exposure to students and to reduce the industry academia gap. The college organizes various sports events such as cricket matches at IIT, powerlifting competition, and TIPS Krida. TIPS believes in the philosophy of healthy mind and in healthy body. therefore provides adequate facilities and guidance to students to facilitate their physical and mental health. For that, the institute also organizes immunity boosting yoga and healthy mind sessions. The feeling of social responsibility is also instilled in the institute. Vivekananda branch of Bharat Vikas Parishad, an NGO, is also run by TIPS. Sevat Society and NSS students also participate in social activities and exercises. There is also a dedicated placement cell equipped with state-of-the-art infrastructure which conducts placement drives at regular intervals with reputed multinational companies. The college has a very strong alumni network and it conducts various corporative mentorship programs for students of different courses. For more field-based exposure, TIPS also has industry tie-ups with various eminent organizations. Moreover, events such as convocation, the degree distribution ceremony, national conference, and Alveda farewell for seniors, transduction for the fresher students, and Unmid, the college fest, are also held to promote a healthy and inclusive culture environment. Welcome to the world of excellence.
Dr. R.K. Tandon, the chairman of Trinity and Kamal Group of Institutions. He is an elegant speaker. He firmly believes in social work and has bagged numerous accolades and various awards. To name a few, Avantika Rajiv Gandhi Excellence in Education, Peace, Tolerance and Mercy, World Environment Congress and Global Assembly, Excellence Award 2018 in the field of social welfare for outstanding work. He is also the president of Bharat Vikas Parishad of West Zone. The Rotary Club of New Delhi has recognized his excellent contribution to the society as a whole. Sir will be joining us soon.
We also have with us Dr. Barka Behit, Director and Professor at Trinity Institute of Professional Studies. Her areas of specialization in teaching and research are database management systems, web technologies, e-business, and data models. She has presented papers, delivered lectures, resource person for value-added courses, and shared sessions in seminars. She has numerous research articles in national and international journals of repute to her credit. Moreover, she has also undertaken and guided various research projects. We now present our virtual bouquet to ma'am. We welcome you, ma'am, and request you to enlighten us with your words of wisdom.
Thank you, Robin. Yeah, thank you, Robin. ठीक है. Hello. Hello, I think Robin, you can hear me?
Yes, ma'am, you are audible.
Okay. Thank you. Good afternoon, one and all present today. Honorable CA Yatinder Nath Khemka sir, CA Munish Kawatra sir, CMA Amarpal sir, my dear colleagues, students and participants from Pan India. I welcome you all to this National Symposium on Sectorial Analysis of Union Budget 2022. Few weeks ago, Budget 2022 was announced by our Finance Minister Nirmala Sitharaman with sheer focus on the development of productivity, climate action, financial investments, mental health, and PM Gati Shakti plan. The main objectives of announcing budget every year are relocation of resources in accordance with the economic and social priorities of the country, which are influenced by government for allocation of resources through tax concessions or subsidies, directly producing goods and services. Next objective is reducing inequalities in income and wealth. by imposing taxes on the rich and spending more on the welfare of the poor. Then is gaining economic stability by introducing the budgetary policies to control the different phases of business fluctuations caused due to inflation and deflation. Then is management of public enterprises for providing financial help for social welfare of the public. The next objective is economic growth, which depends on rate of saving and investments. For this purpose, budgetary policy aims to mobilize sufficient resources for investment in the public sector. Therefore, the government makes various provisions in the budget to raise overall rate of savings and investment in the economy. Next is reducing regional disparities through its taxation and expenditure policy for encouraging setting up of production units in economically backward regions. So at the National Symposium today, the learned speakers would be dwelling on these issues in the Union Budget 2022 in a very elaborate and comprehensive manner. A very warm welcome to all of you, sir. And I hope the students would be benefited to the maximum through this session today and would be able to relate their theoretical concepts in various subjects being learnt by them, that is cost accountancy, taxation, economics, marketing, entrepreneurship, development cell, social responsibilities, and so on with the budgeting aspects. I express my sincere thanks and gratitude to our most honored guests today, CA Yatinder Nath Khemka, CA Munish Kawatra, CMA Amarpalji, who have taken out time from their busy schedule to enlighten all of us in today's symposium. Special thanks to Chairman Sir for his continuous support, motivation, and guidance all through. Last but not the least, I also express my gratefulness to my staff, faculty, and particularly to Dr. Dipali Saluja, Dr. Priyanka Anand, Mr. Rohit, and their team of cheerful and enthusiastic students and teachers volunteer. And special mention is required for Tarushi and Robin also for holding as a anchor for today's session. And all of them are organizing all such sessions with full enthusiasm. And I hope that they will further be doing so in our future events also. With this, I once again welcome all our eminent speakers, and I hope that students will definitely be benefited with this. Thank you.
Thank you so much, ma'am, for enlightening us. We also have with us our HOD, Dr. Dipali Saluja, who is an associate professor in the Management and Commerce Department of Trinity Institute of Professional Studies. She is having an experience of more than 17 years in academia. She is a NET qualified candidate in 2000. She has been holding PhD degree in economics since 2005. During her journey, she has authored and presented more than 20 research papers at national and international conferences. Her research papers have also been published in reputed national and international journals. Apart from her academic journey, she is also active in social welfare activities. She has also been awarded by the ex-president of India, Sri Shankar Dayal Sharma, in guiding and scouting at her college time. And now we present a virtual bouquet to ma'am.
Tarushi, so when a country's budget is presented?
Yes, on the first day of February.
Yes, correct. So do you know what are the main points of budget this year?
Yes, I do. For example, the budget 2022 focused on digital and technology and sectors like infrastructure, health, education, provision of e-services to the masses. But understanding the budget on a personal front is very technical for me.
I know. Can you tell me the basic definition of budget?
It's easy. A budget is an estimation of revenue and expenses over a specified future period of time and is usually compiled and re-evaluated on a regular basis. Budgets can be made for a person, a group of people, a business, a government, or just by anything that makes and spends money.
Yeah, that's a very good definition from Google, and of course, the reason why you consider it technical.
So you know it in a simple way, huh? Please tell us.
Sure, sure. So do tell me, does your mother manage all the expenses at your home?
Yes, she does.
So do you say that she is estimating revenue and expenses for a specified future period of time and compiling and re-evaluating it on a periodic basis?
No, I don't.
Exactly.
So now I got. Like a mother, the government makes a budget to plan their expenditure and investments, savings and revenue for the year, right?
Yes, and don't worry. This is why we have gathered here. Our guest speaker will make it easy for you to understand the budget.
Now, I would like to welcome CA Yatinder Khemka. He is a senior partner of one of the renowned firms practicing for the last 30 years. He is an economist, financial expert, and has good experience of capital market. His areas of practice is corporate and business setups and structuring businesses and succession planning other than audit and taxation. He is the chairman of the banking and finance committees of the Federation of Indian Industries. He has been a member of various committees of ICAI and other organizations. He takes an active part as visiting faculty, speaker, and panelist in various seminars, conferences, national news channels, and other professional institutions on the topics of economic survey, union budget, monetary policy, capital market, and other related topics. We now present a virtual bouquet to Sir. We welcome you, sir. Over to you. Sir, could you please unmute yourself?
Thank you, Taruchi and Robin. And thank you, Dr. Barkha Bahel, for inviting me and giving me the opportunity to interact with you on this topic and inviting me to this prestigious management institute. So I start. Should I start or you will raise the questions?
So you may start.
Okay.
The question answer.
Fine. Okay, fine. So, Dr. R.K. Tandon ji, Chairman TIPS, my co-speakers CA Munish Patra ji and Mr. CMA Amar Pal ji, and my young friends and future of India. I thanks all of you, and I am with you for next half an hour to discuss Union Budget 2023. So friends, the topic basically allotted to me is talk about Gati Shakti, GDP, stock market, inflation, and middle class. Gati Shakti means what? First of all, I just narrate briefly how this budget is prepared. We generally, earlier the planning commission, now it has been abolished, and now the finance ministry directly ask every ministry and departments to prepare their expenditure budgets. When they submit their expenditure budget, according to that, Ministry of Finance estimate the revenue and allocate the revenues in between all those departments or ministries, or ask them to revise their budgets according to the available resources in terms of the finance or taxation or the borrowing. because our budget is basically a budget of deficit, and we had adopted the policy to finance that through borrowing instead of printing the money. There are two ways only to finance the deficit of any budget, that is called fiscal deficit. So we have adopted the policy to finance the fiscal deficit through borrowing. And India's borrowing is almost 30% of the total budget estimates. So friends, this is how we finance our deficits. And the size of the budget is around 40 lakh crore, huge budget. And size of our GDPs are going to be around 250 lakh crore. And it is almost $3.5 trillion on the nominal GDP. And if we and this is the fifth largest economy as far as the numbers are concerned. And if we go through by PPP model, purchase parity GDP, if we compare with the other part of the world, we stand third largest economy. So friends, this is the broader picture where we stand in the world in terms of the GDP. But my question is basically that still on per capita basis, we are still at 1 lakh rupees around per person per year. Our per person per year GDP is 1 lakh crore rupees, 1 lakh rupees. So my concern is that, and my submission on regular basis to the government, it should be doubled at least in next 3 years. And we should focus on that. This budget and last two budgets has increased spending on capital expenditure hugely. And 2 years back, we have merged, earlier the railway budget was separate exercise. But 2 years back, we have merged that. And now this total budget is budget of railway as well as others. So this is the total budget, 40 lakh crore rupees, including railway budget also. We have now not separate budget for railways. And total capital expenditure shown in this is of railway as well as others. And we have increased that. Since last 20 years, I am suggesting to the government and discussing in various platforms that to grow more and at higher speed and for inclusive growth, government should spend more on capital expenditure. And now government is focusing on that. And capital expenditure means to creating infrastructure, to creating assets for the country, which will generate revenue for the future, right? But still, this budget, we are borrowing 17 lakh crore as capital receipt, right? And out of that capital receipt of 17 lakh, most part of that we are spending to repaying the loan or to meet out our interest liability on that. Only 7 lakh crore we are spending on to develop infrastructure. So my suggestion is that repayment of loan, at least interest part thereof, in next 3 years should be met out by revenue receipts, not by capital receipt, at least by through borrowing. So my second submission to government now is that government should focus our revenue from taxation so that we can meet our infrastructure spending, or we can at least bear interest payouts through revenue receipts. And definitely for that, tax to GDP ratio has to be improved a lot. Now I am directly coming to the Gati Shakti. Gati Shakti is very, very important, and logistic is very, very important for any country to grow faster. We have done a lot in last years, whether it is railway or it is roadways or it is aviation. We have even started and focused on waterways also. We are working not only on these things, but we are developing the infrastructure relating to that. And we are developing the warehousing facilities adjoining to that, so that can help out in to make the logistic cost down. And in our country, logistic cost is almost double in most part of the developed or good economy. Our logistic costs are double to them, and we are trying to make it down so that we can be more competitive and we can sell our product at a competitive rate. Because when the cost of the logistic will be down, our cost of production or cost of goods sold shall be down. So government is trying very hard on that, and for that government through group Gati Shakti has trying to integrate 16 ministries. Most of them are related to whether it is railway ministry or Ministry of Road and Transport or so many others, right? So that their decision making should be unified and integrated and coordinated, and decision should be faster. So government has decided through this Gati Shakti, government has prepared a roadmap how we can develop better and create a logistic facility in the country, whether it is roadways, railways, airways, waterways, or ports, or other logistic infrastructures. So that we can be not only infrastructure of transportation will be better, but we are focusing on their capacities also. We are focusing on the safety, whether passenger is traveling or goods are traveling, right? We are focusing on safety of both of them. And not only that, we are very much focusing the speed, how faster we can deliver, or how faster we can reach safely with maximum capacity to other destination within India or out of India. So, and huge expenditure in next budget itself on railways, 2.5 lakh crore is going to be spent. No one can, even 3-4 years back, total budget of railway was not of that, right? And 6 months back, government has announced a PPP model infrastructure monetization pipeline also. That was very, very huge. You people, you student must go download that, read it in detail, so that you can understand where our India is going to be in next 5 years or 10 years, and how good opportunities are coming to you, and you can decide your future where you want to go. Huge opportunities are coming relating to these sectors, as a huge investment are coming, and problems earlier which was there relating to infrastructure investments and relating to infrastructure companies almost has been reduced to zero. I am not saying has been eliminated totally, but has been minimized and addressed properly. And there are so many other issues which government is trying to address. 25,000 kilometer roads are coming to be built in this year for that, right? 400 Vande Mataram trains, which is semi-speed, high-speed, semi-high-speed trains. So how government is developing one station, one product? It means from each station, there is a unique product of that area which can be sold and advertised, right? So like this, so many other things are happening to give speed to the economy. And if government is able to implement its dreams or budgets decisions in actual terms, then I think this is going to be sea change for Indian economy and giving a lot of opportunity. Coming to the next on GDP, I have told you that India's GDP is around 250 lakh crore rupees for the next year. And government has focused it that it should be doubled. Because of the pandemic, that may have delayed. But in economic survey and in this budget also, we are estimated that our nominal GDP will grow by 11.5%. However, in economic survey, we have estimated that our GDP will, real GDP will grow at 8.8 to 8.5%. And in my view, our inflation rate is around 6% now. If we add both of them, 8 and 6, it is around 14%. So government estimating conservatively the 11.5% growth rate of nominal GDP, which in my view will be at least 12.5%, or in my view, it should be more than 13%. If that will happen, so total economy will grow like that, and few sectors will grow more than that speed. So I think to be 5 trillion economy, we can achieve it. And if this built up in next 3 years time, if we can build up this infrastructure and give exponential growth in second and third year, and no pandemic happens, no wars in the rest part of the world happens, if everything is smooth, India will, I think, after many years, we are surrounded by enemies. We are seeing now Ukraine crisis. Even we are safe haven for investors. Investors are betting on us. Investors are betting on our strength. Investors are betting on the opportunities available in India. And investors are betting on the safety of their capital as well as return on their investments. And we are taking care of, and we are maximum time creating wealth through that and creating their wealth for them also. So 2 years back when this pandemic started, I said that in whole part of the world, lot of supply of money is coming into, and at least 10% of that will come to India. And today when I am seeing, not only today, after 6 months after that only, when I start seeing that, the money start flowing in. And around $2 trillion has already come to India out of total kitty of around 15 lakh crore, $15 trillion. Right? So investors are very confident, and we are a developing economy, and we have 100 crore of population, 80 crore. Government decided to give free food for last 2 years. So you can see the potentials to grow. Our population is still 80 crore people. Still, government think that they are not capable of having food even. And I am seeing that it is not only 80%, more than we can add easily 40 crores to that population. Those are living with minimum requirement. Basically, those don't have even minimum basic requirement to live the life. So government is, since last many years, government is focusing to focusing on ease of living, whether it is relating to giving lights to the villages, it is giving gas cylinders to the villages, it is giving shauchalayas to the villages, creating roads to the villages, and giving housing loan to the tune of around 3 lakh rupees to each one, and created, you can think in this budget also, government has made provision for 80 lakh houses. No one can imagine how the cost of, and today housing loan is available at 6.5% lowest ever. And I'm not seeing in future also it is going to be very high. If you are basically organized properly, your sources of income are right and identifiable. And even for that, if 40 lakh, 30 lakh house loan is you are going to have, government is going to contribute around 3 lakh to you. So total cost is again coming down, and those are in tax net. For them, that rates of 6.5 is again coming down to around 4.5% and 5%. So how practically you are paying what you have taken as a capital to borrow the house? And I think in near future, as our economy is maturing, supply of money is available with the banks. Banks are best capitalized since last 10 years now in India. And I am seeing huge opportunity in at least public sector banks in the days to come, because they are well capitalized now. And they are well controlled now as far as technology are concerned, as systems are concerned, as far as disbursements of loans are concerned. Their monitoring are much better than earlier. So that is why, as Indian banking strength is very, very good now, so supply of money is very huge and available at cheaper rate. And I'm not seeing, even this time in monetary policy, everyone was saying that there is going to be 0.25 basis point high in repo rate or reverse repo rate at least. But government hesitant to do that because they know it is not required right now. Growth is required right now. And government chosen that stance to make the India grow faster and make the loan available at a cheaper rate to the industrial and other organization also, for other whether it is individual person or anybody else. So I'm not seeing, but issue is that how best we can implement those schemes, how best other sectors, everyone, each one of us, those are there. in those whose hands the implementation process is there, which is outlined by the budget or other policies of the government, how best we can implement, how best without corruption we can implement, that will decide that how can we grow. So I think to achieve the $5 trillion is not a tall task, and we will definitely grow. And if something happen extraordinary, we may grow faster. And now we should not talk about 5 trillion economy. We should start talking about 7 trillion economy at least in like 5 years. And for that, we have to focus, we have to be more vigilant, and industrialists should play their role. They have done that. In this pandemic also, they have played their role and generate the revenue, given the taxes right to the government, so that what they have estimated, even revenue in this year till November is 67%, tax revenue is 67% higher in comparison to the last year. So I think, and corporate taxation rate is lowest ever. I hope that, and companies are growing very fast, and organization sector transactions in organization sector has increased tremendously because of digitalization, because of other things. It's good. And I hope in near future also, we can see in some industry, in some part of the industry, there is sea change and margins are improving. In India, capital investment going to happen, I think, mid of this financial year or end of this financial year, because we are at 65 to 70% capacity. As far as most of the industry reaches at 70% capacity, they start investing and they start increasing their capacities. So my view is that we are going to grow faster. In this huge pandemic, our dollar also has been in a little bit a range bound, and thanks to that, government is able to best foreign exchange management. This RBI has able to done around 73 to 75. Not even 1-2 instances it has touched 76, but most part time it is around between 73 and 75. Rupee has not depreciated, and we are benefited a lot because of that. If one can envisage that if dollar is going to be around 80 rupees, how we are going to be impacted and how the inflation is going to be impacted. So I'm not seeing in near future also there is going to be very a shift either way. And if dollar remains stable, our exporter as well as importer are able to take wise decisions and aggressive decisions. Yesterday itself, RBI decided to do dollar rupee swap. That will impact little bit, but not hugely. Not hugely. And my dear students must read these type of news and go deep into that. What is this swap and how that works, how that impact the businesses, how that impact the economy, and how it works practically. What is this swap is? Currency swap is, or interest swap is, so that they can analyze the business transactions well. They can analyze the sectoral impact well. In this span of time, I cannot tease them. This is a huge topic. So India is doing well in this pandemic, and there are a lot of policy decisions has happened, whether this PLI is going to be do wonders, and government has done that, and we may come out with more PLIs. Already what we have promised in last year's budget, we have government has implemented that. So I think as there is going to be inflation in the country, and we have estimated that our economy is going to grow by 11.5% nominal GDP. So definitely industry is going to do well, whether it is service-based industry or goods-based industries. Because agriculture is going to grow by 4%, this is a matter of concern. My second area after that is as far as inclusive growth of the country is concerned, how the 50% those are dependent on agriculture sector. And practically when I say that agriculture sector contribution to the GDP is 15-16%, I say economists analyze that is wrongly. Because everything, whether it is transportation is or food processing, like tea industry, sugar industry, right? Lot of other industries, power sector, transportation sector, so many other sectors are directly related with the rural economy or agriculture economy. So my intake is that my opinion is that agriculture-based economy and contribution to the GDP of agriculture-based economy is not 15%. It may be direct, but indirect, practically that is also direct, is more than that, around 50% you can say. So when economists analyze that, we have to do again exercise in computing the GDP components. That is other matter, not to discuss here, but just I touched upon that for the inclusive growth purpose. So if we want to grow India faster, then agriculture-based GDP should grow at least 15% in next 5-10 years. Then only those 50%, 75 crore people, 80 crore people will at least be able to live their life with minimum standard of requirements. Today, they don't even have the minimum means to live life.
Excuse me, sir.
Yeah.
Sir, due to the crunch of time, could you please conclude your session in 2 to 3 minutes?
Yeah, fine. I have touched upon most part of the things. I am coming to inflation now only. In the whole world, inflation is a concern, right? So, but India, we have fixed the 4% rate for inflation, plus minus 2%. And this time we are now around 6%. But neither I am worried nor RBI worried. Yesterday itself, they've said that RBI is not seeing the inflation is to grow by more than that. It will come down. And this inflation is basically not the domestic inflation. It is because of the international concerns inflation, whether it is crude oil prices or whether it is raw material prices or whether it is metal prices. So this is the imported inflation, I termed it like that. So, but inflation is good for the country like India, which is developing country, and that will impact the share prices also. If there is an inflation, controlled inflation, it is good for any developing economy. If our inflation is controlled one, and we try to be 1%, 2% inflation or deflation, then India will be in huge trouble. So as far as middle class is concerned, whether it is transportation system, whether it is housing loan extension scheme, whether it is stable taxation system, whether it is no one can imagine that in India, the person who is earning 40 to 50, 60,000 rupees is out of the tax bracket. They don't have to pay anything for the taxation. So now India is taxing to the richest at a reasonably good rate. So middle class is more or less happy, and this is the middle class who will take the benefit of the all infrastructure and other facilities. So thank you very much. This is from my side. There are a lot of things, whether I can speak 2 hours or 3 hours. This is the subject on which I can even whole day we can discuss. And there are a lot of things, and each student must read it. Go to the Ministry of Finance side. There are so many papers relating to the budget, and student of finance and economics and others also businesses must read it. Thank you very much. And for once again, thanks to Dr. Barkha Bahel for giving me this opportunity. Thanks, everyone.
Thank you so much, sir, for adding so much value to the session.
Thank you, sir.
Now we have another speaker of this session who will be giving his views about the core tax. We have with us today CA Manish Kabatra. He is a founder member of the CA firm. He holds an experience of more than 30 years of handling direct and indirect tax issues, which include handling income tax search and seizure assessments. He has delivered more than 100 lectures to chartered accountants as well as students under MCS course organized by ICA. We now present a virtual bouquet to sir. We welcome you, sir, and over to you.
Thank you, Tarushi and Robin. First of all, it's a good afternoon to the whole family of Trinity Institute of Professional Study to allow me to be the part of this knowledgeful webinar, as well as to make the deliberation on the Finance Act 2022. Basically, the topic has been allotted to me. The finance provisions related to direct tax has been introduced in this Finance Act 22. In this Finance Act, as everyone knows, income tax is a levy on income earned by resident as well as non-resident in India. However, in this budget, the government of India has introduced 83 amendments. Yes, 83 amendments related to direct tax, but out of which definitely will be had to constraint of time. I will discuss some major one. First of all, I will start with the very most welcome amendment made by Finance Minister, in this case, introduction of Section 139, subsection 8A. As per this section, Government of India allowed to us to file their return, updated return. Note, till date, we are allowed to make the belated return as well as revised return under Section 139(4)A as well as 139(5). As per this, you can, you can file your return up to July, as the due date July is 31st July of the next year. After that, you can file your return up to 31st December of the respective assessment year. Up to respective assessment year, allowed under Section 139. It is called belated return. And before that, in case if you want to allow a revised return, in case if you have made some mistake or you have forgotten some income, or you want to make some forgotten to allow some TDS, TCS, any levy, you are allowed to file it again up to 31st December of the next year. But in this budget, the Government of India is introducing a new concept, which is updation return. As per this, you are allowed to make any updation in your earlier filed return up to 2 assessment year. Yes, at the end of, for example, right now we are in 2021-22. It is called financial year. Income Tax Act speaks about the language of income tax language speaks about assessment year. For the financial year 2021-22, assessment year will be 22-23. As everyone know, all of you are the students are learning income tax deeply. And after that, for financial assessment year 2022-23, you are allowed to revise your return or not. I will not use the word revise here. The budget has used the word updation. Updated your return for the next 2 years, 23. It was a 23-23, 24-25, up to assessment year 25. You can update your return. However, there are certain restrictions introduced by Government of India. In that case, the updation of return will be only restricted to increase in your income. You are not allowed to decrease your income or increase your refund. Yes, definitely. There is a bias situation introduced by the Government of India. They are biased just to collect the revenue, but not to give the benefit in terms if you have forgotten to claim any TDS, any advance tax, any self-assessment tax, still have been forgotten due to any reason, whatever the reason, but you are not allowed to get the benefit of the same. Yes, In this case, you are only allowed to update your return only in upward trend. Yes, and upward trend up to 2 years. 2 years here means 24 months from the end of relevant assessment year. The relevant assessment year for the financial year 2021-22 of the 22-23. In case if you update your return up to the first 12 months from the end of relevant assessment year, first 12 months of the relevant up to 22 के बाद, in case we want to 12 months, the levy on you, yes, government of India is also charging an fees, you will call this, in the budget is fees, 25% of the additional tax and interest. Yeah, as everyone know, in case if you revise your return or revise the section in the default in payment of tax regarding advance tax, TDS, interest under section 234A for the late filing of return, section 234B for the reduction in the advance tax against the levy of complete tax, 234C again any related to advance tax. In there, if there any portion of the interest in your tax payment, tax plus interest, इनका total करके 25% of the total of tax and interest will be levied as a fees. Yes, levied as a fees. 25% of tax and interest levied as a fees in case if you update your return up to first 12 months. However, still there is a liberty to again extend it for the next 12 months. In case if you file beyond that 12 months, the fees will be 50% of the tax and the interest you need to pay on this income, updated return. Yes. However, there are certain other restrictions the government of India has introduced in case if any notice has been issued by the department, income tax department already issued to you, you are not allowed to update your return because it will be a buy situation for you. Because in case if they have some information against you, you have already you have already fudged your income or increase your income or decrease your income due to any reason. Now they got the information from any other source. You are not allowed to do this. Second, everyone as on day isn't today it's one of the hot cake topic in the market. It is that the taxation of cryptocurrencies. However, in the America or in any various Western countries, cryptocurrency is termed as a capital gain, and taxable under the head capital gain. How it is the one of the head under 5 head, all of you are reading as per section 14 of the Income Tax Act. We have the 5 head ones, starting with the salary, house income come under the head house property, then income from capital gain, number 4 income from PGBP, then income from capital gain, and residuary head income from other sources. There was still confusion in India under which head the income realized from the transfer or the gain from the transfer of cryptocurrencies, as everyone know in the market is one of the very popular term, under which head it will be taxable. It was completely a mess. Someone was offering under the head capital gain, other one offering under the head income from other sources. Now in this budget, the government of India has put rest on this confusion. They offered that, and a new section has been introduced, a section 2, subsection 2, clause 45A. Yes, section 2, clause 45A. A definition has been introduced. A definition has been introduced about the cryptocurrency. As per this definition, it is not called cryptocurrency. Government of India has introduced it. It's a virtual digital asset. Yes, VDA. As per section 2, clause 47A, a very wide definition. Everything has been covered in this definition, like any information, a code, a number or token, whatever you will call, generated through cryptographic means. However, it's a one of the very technical term. I do not much know about this technical term. Otherwise, whatever name card, providing a digital representation. However, in case if you provide a representation in terms of value to any digital asset, for example, a company offer a coin, a digital coin to their employees and ask it is just equivalent to it has some value. In future, if you stay with our company for a number of years, we will give you value against this token. It is called digital token. This is also been covered in this definition. Yes, it will also be. Earlier it was confusion whether this kind of token in kind will be taxable in India or not. Now in this budget, it has been completely said, yes, it will be taxable. It will be taxable. And NFT, number of NFT exchanges are working in the whole part of the world. Like this is in our India stock exchanges, BSE as well as NSE are working on that. On which we share trades, derivative, loan instrument, and many other instruments traded on our exchanges. In the same manner, there are NFTs, non-fungible tokens exchanges operating in all part of the world. Now this term has also been incorporated this time in the budget. it will be also taxable. Now the question arises, under which head it will be taxable? It has been clearly, this will be taxable under the head income from other sources. Yes, now this, it is not a capital asset as per the Government of India definition. It is not a capital asset. This income will be taxable under the head income from other sources. Yes, the value, the consideration you will receive at the time of transfer of capital, at the time of transfer of your currency, the deduction only will be allowed less cost of acquisition, the cost at which you have purchased earlier this cryptocurrency, this token, this digital means, everything you will be called. It will be only the component which you will deduct from the consideration part, and the balance will be taxable under section 115. Yes, a new section has been introduced under section 115 BBH at the rate of 30%. Yes, maximum rate in India for any individual, maximum rate for a resident 30%. However, there are how the Government of India will know at either you have sold the digital currency or not. Yes, and for that, just to get the information how much you have sold, how many times you have sold, they have another introducing new section which is called 194S. If 1% TDS will be deducted, yes, at the time when you will do any exchange, or you can say any transaction related to this tokens, or you can say that virtual digital assets, if 1% TDS will be deducted at the time of transaction. Who will deduct the TDS? Yes, the person, the exchange, or the manner. However, still the Government of India will come out with number of explanation about this. Who will deduct, at what time will deduct? But it is sure that if 1% levy will be on at the time of transfer. However, in case it is on non-digital terms, still 1% is, for example, you transfer, you give in the consideration. It's a barter system. For example, you say that, for example, you have purchased from one. Do not offer them. You get something in kind, and you are also paying in kind in terms of cryptocurrency. For example, in terms of digital token, then how the 1% will be calculated? The person who is giving the digital token have to ensure that before transfer this digital token, you have to deduct at least 1%, either to get from him or from your own sources. And in case if you allow from your own sources, you have to make clubbing of the income as per the Income Tax Act 1961, as all of you know. There's another section for the newcomers. As all of you know, Government of India wants startups to bring new opportunities in India of job as well as new businesses, and for that a new section has been introduced in 2016, which is called section 80 IAC. As per this section, Government of India allowed 3 consecutive years how much you will be earned in terms of profit. It will be allowed in terms of profit, it will be allowed tax free for the 3 consecutive years out of a pool of 10 years. Yes, for next 10 years, in case if you start your own startup, and for the next 10 years, maybe you incur loss, maybe you do not earn profit as much you have desired, that the Government of India allowed, okay, we will allow you a deduction out from the profit. Even you can say that deduction from the profit, whatever you will be earned, it will not be taxable at all for the next 3 years. Next 3 years out of a pool of 10 years. Out of 10 years, you can choose any 3 years. It may be first 3 years, it may be in the middle of the 10 year, or it may be end of the 10 year, as per your convenience. This deduction was going to extend up to 2022. Now 1 year has been extended. 1 year has been extended. The part of the election, the government wants that new startups should come up in the country and make new innovation with the new innovative ideas as well as new opportunities for the job. Definitely, government wants that. A new section has another new section, section 194(1)(a). Not a new section, however, it's one of the old section. As everyone know, if you go to the market and purchase a immovable property above rupees 50 lakh, if 1% levy is applicable on this transaction amount, if 1%, for example, you purchase 50 lakh, before making the payment to the seller, you have to deduct 1% TDS. You have to deduct 1%. You have to assure that, otherwise you will be penalized. In that case, what was going on in the market? They were making the deal. They were making the deal to sell or transfer the immovable property below the stamp duty amount. The stamp duty, as everyone know, is the state government levy at the time of transfer of immovable property. It is the right of state government, not the central government. It's the Stamp Duty Act. Under the Stamp Duty Act, what was that? As per there are number of sections, there are number of sections in the Income Tax Act on which you cannot sell, you cannot transfer your immovable property below the stamp duty amount as prescribed by the state government. However, under section 194(1)(a), there was not any kind of restriction there. In this budget, the government of India has introduced this restriction in section 194(1)(a) as well. And due to that, you have to take care before making the payment for purchase, before purchasing any immovable property, that 1% should be of the stamp duty or the transfer price, whichever is high. Yes, you have to assure that. In case if it will be short, you will be penalized of the difference amount under the Income Tax Act 1961 under the various provision as I spell out there. Yes. In new section 2814. In the business, there are number of in-kind benefits allowed by the companies to their distributors. For example, if you achieve such amount of target, we will offer you a journey to overseas. For example, say US, say UK, out of that, and it has cost to the company. Companies are claiming as an expenditure in their balance sheet or in their profit and loss account. But on the other hand, the person who is getting such amount of benefit not offering for tax, it is taxable as per section 28, subsection 4, subsection 1 IV. It is taxable in the hands who is getting such in-kind benefits in terms of money. They have to offer this here. But believe me, as per we have also number of clients, no one is interested to offer such amount. Who would know? Kisko pata lagega that I have journey with the money of the company or with my own money? Yes, definitely. When the government of India has noticed that such kind of loopholes are coming on in the market, they introduce a new section. Under this section, they have introduced a new provision before section 194R. Under the chapter XVIIB and in the tally of TDS provisions, section 194R. And as per this, every person or company who is making such providing in-kind benefit to their distributor takes care before providing such distribution 1% TDS. Yes, they have to levy 1% TDS, 1% TDS deducted from the benefit in terms of value. Firstly, for example, you are offering one ticket for the overseas. Calculate the value of such ticket. 1% on the monetary term, you have to deduct it, then offer it. In case there's a confusion that, however, I am offering in non-monetary terms, how can I deduct in monetary terms? You have to collect from him. In case if they are not ready to pay, you have to pay from your own pocket, and then make such kind of levy into the income or into the clubbing provision. There are clubbing provision also be attracted in that case at the time of calculation of TDS. So there's new provision, and there one more provision, section 115BAB. As per this section, the government of India introduced in 2019 through a circular. Yes, in case if you open for the residents, yeah, it is not available for the non-resident. For the resident, in case if you open your domestic company, open a domestic company in India, a manufacturing company, not in service sector, the taxation rate will be 15% without any deduction and exemption. However, there are number of deduction and exemption available under the Income Tax Act. But in case if you adopt this scheme after 1st of October 2019, if you open up your manufacturing facility in India, the tax rate will be 15%. Yes, 15%. It is one of the lowest in the world. It is one of the lowest in the world for the corporate sector. In case of individual front, as everyone know, you are paying 5%, 20%, and 30%. But for the corporates, it is 15%. It is one of the opportunity. And in case you have to open your manufacturing facility up to 31st March 2022, now the government of India realized that due to Corona pandemic, there were number of restrictions, number of problems are coming up before the newcomers who want to open up their manufacturing facility, but shortage of money, shortage of, you can say that, any facility, shortage of any infrastructure platform, they were not able to open it up. Now the government of India in this budget have extended it for one more year. For one more year, this now you can take the benefit. Now you can take the benefit for one more year, but after 31st 2020, the everyone who is interested to start their own venture in terms of manufacturing facility at any cost, you have to go ahead with that. A new section under section NPS, as everyone know, is a scheme introduced by the government of India in terms of NPS. It's called National Pension Scheme. Earlier, it was Provident Fund, or there are various other schemes available in the government kitty. However, still as on day after 2014, in case if you land into a government job, government of India is offering NPS scheme instead of any pension scheme. Still, there is a very, you can say, burning issue as among the government employees. As on day earlier, in last year budget, the central government has announced that earlier it was at 10%. the government contribute 10% of your basic pay. On the other hand, deduct 10% from your basic pay. There were two components. First from the government and second from the, you can say that first from the employer and second from the employee. It was 10% from the employee and 10% from the employer. But in the last year budget, the government, central government has announced that the central government component will be 14% of the basic. Yes, in the case of employee, in employee front, it will be still 10%, but on the government front, it will be 14%. And as per law, deduction is available under section 80 CCD, chapter 6A, under section 80 CCD, it will be restricted to 10%. And at this time, Government of India has increased the reduction amount from 10 to 14% only for the central government employees. Yes, under section 80 CCD, it was available only for the central government employees. Now, in this budget, various state government have also shown interest to increase their component from 10% to 14%. And due to this, the Government of India, central government has allowed this exemption to and extend this deduction central government as well as state government employees. And now, as per the restriction, as per the time available to me, I rest my deliberation here. Thank you. Thank you, Trinity Institute of Professional Studies.
Thank you so much, sir. Now, we invite Dr. Priyanka Anand, who is the Associate Professor at IPS, for moderating the further session.
Dr. Priyanka Anand would like to thank our expert speakers for their gracious presence in the National Symposium. It's a real pleasure to listen to CA Munish Kawatraji. I really appreciate you as expert have delivered and explained about taxation sector of budget 2022 in a very precise and easy manner. Sir, I really thank you for taking out your valuable time and sharing your insights on this sector. Sir, I would like to ask one question only. I want to ask that, do you think taxation on crypto is right?
Yes, every country is making the taxation on it. However, in case if you are earning, we are living in a population of near about 140 crore. And believe me, more than 80 crore PAN have already been issued. Right now, we 2022 31st March 2021 data has already been issued. Not been issued. Still, there's a time to come to file the return. But up to 31st March 2020, only near about 6 crore income tax returns have been filed out of a population of 140 crore. And out of 6 crore, 82% returns. 82% returns was up to 5 lakh rupees. And everyone know up to 5 lakh there is a nil income tax. What are we contributing to our return? We have to achieve $5 trillion economy. We want to become the global power, but it is possible only with the help of money. And the Government of India has taken a very much step. In case earlier it was taxable, it was not like that. It was not taxable earlier. It was also taxable at that point in time, but there was no clarity under which hat it will be taxable. But in this budget, the Government of India has put the rest on all the confusion and clearly make it will be taxable income from other sources at the rate of flat rate 30%. At the flat rate of 30%.
Okay, thanks, sir, for your kind words. I really appreciate your zeal in making this session so informative. Thank you, sir. Over to Tarukshi and Robin.
Now we invite the third speaker of this session, CMA Amar Pal, who will present his views on the education sector. He has 12 years of diverse experience with expertise in streamlining the accounting domain. He has done his MBA in finance and CA Inter from ICSI Delhi. He performs accounting functions, especially in the areas of account balancing, ledger reconciliation, reporting, and discrepancy resolution. We present him a virtual bouquet. We welcome you, sir. Over to you.
Thank you, Robin and Tarushi. Am I audible?
Yes, sir, you're audible.
Thank you, Taruchi and Robin. First of all, I thank you to Institute of Trinity, and I thank very much to Dr. R.K. Tandon, my speaker, joint speaker, CA Yatandar, CA Manish ji, and all listeners. I will present on these topics. I will provide me the session on the education budgetary allocation to the budget 2020-22-3. The years present to the budget for the education sectors. In this session, they are provided the number of schemes to the peoples to India for education. Particularly, we have launched Prime Minister E-Vidya, which expanded from earlier it was due to the COVID pandemic, it was difficult to the for the scheduled caste, scheduled tribe, local area to continue with education. So Government of India provide the earlier e-portals. Why this is one class, one TV channel program in under Vidya. Government expanded its program from 12 channel to 200 channel. Now earlier it was from one channel. We are contacting with one class, one after another. Now we can provide education to all children in one channel and all classes one channels in different language, and provide it to the children in their regular language. So we can provide to the education to the children in affordable manner. Those who have difficult manner, provide this one education this through number of channel provided to the governments. Other Skill India program launched by the Government of India. This is in Skill India. We have number of virtual labs, 750 virtual labs provided by the in the coming years for the science and mathematics research. So we can research on this one and provide the automatic on the actual manners. And 75 e-labs provided to the skill learning, such as we can education to the students such that we can learning as they are number of planning to the piloting, automatization, electricity, and develop all the things. The digital university is a new concept in these budgets. Digital university means student can learn any subject from their homes, from this distance education, distance with quality content. We can provide the number of education to the students with their requirement, and with high quality content to the student we can provide and collect this one with digital mediums. This digitalization of university can provide reach to the number of students who can reach far. He can join any at a time. He can also join to the any course with their suitable times on online this one. So number of universities are providing today as the Kerala is the first state to provide the digital university. But in recently, Delhi IGNOU is also launch a e-program on online only this one. Online program this one, so that in digital university, the content can be provided with highly expert faculties. This program can be provided to the students with their clear quantity. The number one is high quality content will be delivered through digital teachers. And this Skill India development also scheme launched in this budget 2020-23. इसमें digital ecosystem for skilling and livelihood. We launch for the promoting online training. The student can be provide online training and he can earn their livelihoods. On this one, we can base student should be based on their livelihood, means he can join any course which is the skill India. So labor force this one for this one. So the student can join any course with any times to get their match with industries. This course can be not particularly should be restricted to the particular 2 years, 3 years. It should be depend upon the skills. So he can, after acquiring the necessary skill for job markets, he can join the company any for his livelihoods. As not as the, we are getting the MA, PhD, MPhil, and we are not getting any job in the current scenario. The government will provide necessary skill. If this provide this one, education system should be digitalized. This education system government has allocated last year 99,000 crore to the education. Apart from that, we have consumed on actual basis only 85,000 crores. Now in this budget, government has allocated 1,04,000 crore to the education in this budget. But this mainly budget expenditure is gone on the non-capital natures. Means, for example, this one going to salary, maintenance, all these things, but not creating this one as a capital infrastructure. So can we can reach this benefit to the students in Latin or not. So it requires our education system and funds should be required on the basis of capital structure, enhancement of classroom facilities, and basic infrastructure should be increased so that number of employment and generated more those is required this one other than this one. And apart from this, the government has launched a high quality e-content launch delivered through digital teachers. Teachers should be regularly upgrade with the technology and the systems so that he can provide to the student with high quality content to the students as a with latest technology. On this system, we can provide this one budget. This system can be so much that our level students should be so that he can hire with their technology specialized knowledge to the in the field. In this scenario, we can compete and win the market. So education should be the skill base and not on the degree basis. So market can be acquired knowledge with the student. We should get the student with that specialized knowledge so he can in the market approach this one. So this one. This in particularly budgets we have allocated 0.04% of the GDP and 2.7% of this budget percentage of we are getting this one in education policy. So in this view, I said that on the basis of the union budget analysis, government have issues number of scheme launches. For example, this one class, one room, in one TV channels. So the benefit to the students who are in remote areas, and they can afford the private education with high cost. And other from that, government has high this one given the skill-based development to the education system so that we can acquire with the best students with the technical knowledge and labor skills that require match with the company requirements, industrial requirements. And we should provide the education to the all students with their skill, necessary skill required that will be he can utilize for his future benefits. Apart from the university, government had allocated fund to the education sector, so government not utilizing their proper resources means government last year government provided 99,000 crore to the education system, but it utilized only 85,000 crores. It is unutilized for the funds which can be create number of this one, not creating opportunity to the students who can this highly education can be available this one. So with this remarks, I close my presentation. To that, the government has given number of new scheme and health. All these provide education system to in budget system. Number of educators provide in the system. With this remarks, I close my presentation to the this one. For any remarks, question, this one.
I will appreciate CM Amarpalji. Sir, you have discussed education sector with us. Thanks for your enriching words. I want to extend my thanks to you for sharing this useful analysis of education sector. So I wanted to know one thing. After COVID-19 pandemic, education sector is highly affected. Do you think this year budget can be a true revival for education sector?
Yeah, after this pandemic period, government has given the budget 1,04,000 crores. That will boost to our education system and provide the especially digitalization for the industry, and numbers poor person can be utilized, can be benefited for this number, this type of skillizations. And apart from that, this budget we should focus on this one basic infrastructure. Capital is should be made available to the students. For example, in the remote and areas, basic infrastructure is not there. So we should utilize this amount for the creating the basic infrastructure. For that, student can be benefited for that one. The amount should be utilized in proper manner in the coordination with the center and state.
Okay, thank you, sir. Thanks for explaining. I would also like to thank CA Yatinder Khemkaji. I'm very much sure that all of us have gained good amount of knowledge about economic development, which was told by Sir CA Khemkaji. And he also told that, after the declaration of budget, how our economy revived in seeing the economic development all through. And sir, I really thank you for the valuable insights about this sector. So one thing I just want to ask you that, sir, can you just give an idea that to why this budget does not speak about inflation, sir? Khemkaji, Mr. Khemka, CA Khemkaji. Sir, I think you're on mute.
But it is all about from where the money will come and from where the money will go. Budget generally don't talk about the inflation. It is the economic survey which talk about the inflation. And government through economic survey has already explained that if the total premise of the economic survey as far as an budget is concerned, we have estimated our estimates on the basis that our data will come if the crude level will remain between $70 to 75 per barrel. It is not that in the current scenario that crude oil is at around 90 or 98 per dollar. It is not that. What is the average cost to the oil producing company or government procurements? The total average cost of the inventory of the crude available with India. What is that cost? That cost should remain between that bracket 70 to 75 per barrel per dollar, $75. So if that is remain, and RBI give that inflation instance through that their monetary policy. And yesterday also the inflation is around 6, and RBI is easily elaborated that they are not worried about the inflation in the country, and they are not seeing that it is going to be much higher than that, the level which is around tolerance limit, because this is the upper circuit. 6 is the upper circuit of the tolerance limit. However, the other part of the world, inflation is usually concerned, and in the US, inflation is highest since last 40-30 years. So we should not be worried about the inflation right now, because things are well in our control, and I hope that inflation will not impact the consumers. And as far as there are two types of inflation prices are concerned. One is WPI and other is CPI. And CPI is not so worried about. Little bit there are things which is WPI. WPI inflation is a little bit higher, but that squeeze the margin of the industries. So I think it will be eased out in the later part of the year.
Okay, sir, thank you. Thanks a lot for your valuable words. You explained really well. Thanks for your valuable time and sharing your in-depth analysis of the sector. Thank you so much. Over to you, Tarushi and Robin.
Thank you so much, ma'am. Now, I would like to invite our HOD. Now, may I invite all the questions from the students on the stage, please?
Sir, I would like to put up a question. What was your expectation or taxation sector in budget 2022?
Question is to whom?
Sir, it's to Manish Quatra, sir.
Will you please repeat the question, please? I didn't get what you want to ask.
Good afternoon, sir. I would like to ask you that
Yeah.
what was your expectation on taxation sector in budget 2022?
Yes, definitely. On the individual front, this budget has no much more. Letting number of candidates or number of even my clients have complained to me, sir, what the government has done for us, for a common people, in terms of there is no any reduction of tax rates, or there is no any new deduction has been introduced or exemption has been introduced. As I have already told, on the 2nd of February, I was listening to our revenue secretary, Mr. Tarun Bajaj. He at that point of time, he said that, sir, up to 31st March 2020, out of 140 crore population, only 6 to 7 crore returns have been filed. And out of them, only 82% was up to 5 lakh without any tax. And out of 18, rest of 18, balance, rest of the 18, 12% was up to 10 lakh. And the balance were about 10 lakh to up to 10 lakh, and balance 8% was up to 10 lakh to 1 crore. 10 lakh to 1 crore, and about 10 crore it was in number of thousand. However, there is a near about lakhs of cards in India already above the costing of rupees above 1 crore, and we are just offering in one number of thousand, for example, say 1,000 something hundred in the income, on the income front we are offering. Then in that case, whatever the budget has presented, as per me, it is absolutely correct. It is one of the welcome budget in which number of misconception which were in the our fraternity has been dissolved, and now we are in the, you can say that, enlighten us what you should do and what you should not do. Hope you will get the answer of your question.
Yes, sir. Thank you so much.
Good afternoon, sir. I want to ask a question from Yatendranath Khemka, sir. Any idea as to why budget not touched up the need of Indian middle class?
Directly, as far as taxation are concerned, they might not have changed any taxation rate. But from other point of view, whether relating to infrastructure development, whether relating to education sector, whether relating to other resource availability, definitely the benefited ways are going to be to the whole country. And as far as taxation is concerned, in this pandemic time, government has not tried to increase the taxation rate to recover the losses, to meet out and control their fiscal deficit. Because the resources to the government are very, very limited, and they have chosen the way to develop the infrastructure for the benefit of the country as a whole. And for that, they have done a lot, but they have not increased the taxation rate for any class of the people. And they try to some way rather given relief to them, everyone. So there are a lot of things which are there, which are of going to be beneficial for the middle class, as far as infrastructure, as far as transportation. If rails are better, if aviation sector are better, that is definitely going to benefit the middle class.
Okay, thank you, sir.
May we now invite our HOD ma'am, Dr. Dipali Saluja, to present the vote of thanks.
Thank you, Robin, and thank you, Tarushi. I take this opportunity as an immense pleasure to extend a vote of thanks on this great occasion. I, Dr. Dipali Saluja, on behalf of the TIPS fraternity, extends you a very hearty vote of thanks for gracing the event and sharing your insightful thoughts, vision, and expert opinion. I would like to express my sincere gratitude towards Honorable Chairman Sir Dr. R.K. Tandon, who has always provided us with such platforms to groom and guide our students. I firmly believe this session would have guided the students to better understand the union budget of this year from our renowned panel members. Your moral support and guidance always inspire us to be innovative. Thank you, sir, for all the support you provided us. We thank our director, ma'am, for seeding us with this thought of organizing this event on union budget, where our students will explore and learn from the distinguished speakers. Thank you, ma'am, for providing all the mentorship and for always being a constant support and guidance, without which we couldn't think of organizing this event. We thank our esteemed resource person. We are honored to have the presence of CA Yatendranath Khemka ji, our first resource person, for consented our invitation and coming here and gracing the event by sharing his rich experience. He brilliantly explained about the changes of economic development, for which he covered the infrastructure sector in detail. Thank you, sir. I would like to thank our second resource person, CA Munish Quatraji, who let us know the taxation part of Union Budget 2022-23. Sir explained that how the taxation policy may impact the economy. Thank you so much, sir. I thank the third resource person, CMA Amar Pal sir, who covered the education sector, which is a basic sector of the economy and which is a basic need of an individual. Thank you so much, sir. I thank all the external participation who joined us for the session. I would also like to thank organizing team, Dr. Priyanka Anand and CA Mr. Rohit for their efforts they put for organizing this event. I would be failing in my duty without expressing my sincere thanks to all my faculty members. A special mention to Mr. Ajay, Mr. Sahil Dhal, Mr. Tapanshu, and Mr. Mehtab for their immense support. I'm grateful to the admin staff, especially Mr. Jaspal, Mr. Shubhash, and Mr. Musharraf for the smooth execution of the event. I would like to acknowledge and appreciate our students, volunteers, Tarushi and Robin for wonderful anchoring, Harpreet for being a part of designing team, and Abhinav, the student of BCA 4th semester who has designed the presentation aesthetically. Last but not the least, I appreciate my loving students for their presence. Without them, we are nothing. We will try to conduct more insightful sessions for you in future as well. Thank you all. Thank you so very much being with us. Thank you so much. Over to you, Tarushi and Robin.
Thanks.
So successfully today we have come to the end. I would ask if any of the guest speakers would like to add anything about their experience with us.
It's really nice that we are talking on this good day with all of you, and we have got a lot of queries, and I hope that we are able to deliver what as per your expectations. And it is really nice always nice to talking with the young friends and have their inputs, and I hope they should go more about economics, and whether you are wherever you are, even engineering student want to learn economics, right? And most of the people in the world, those know economics and politics, they lead to the world or the organizations. I wish you all the best and hope these three sessions are benefited you all, and we are available to you whenever you will invite us. Thank you very much.
Thank you so much, sir, for such a lovely message. I wish a happy and a great day ahead to everyone. Thank you for joining us.
Yeah, before we leave, can we have one group photograph?
स्क्रीन तो मैडम सबका ऑफ है.
Yes, the Panshu, if it is done, then please check. Yes, Priyanka.
Yes, ma'am. We are taking photographs.
Ma'am, just a moment, still it's pending.
Yes, some pictures are taken.
Thank you very much.
Done.
Thank you.
Thank you all of you.
Thank you. Thank you, Mr. Munish, Mr. Amarpal,
Mr. Manish,
Mr.
thanks a
Yatindra.
lot.
Thank you very much.
I think Mr. Manish wants to say something.
No, nothing. Yeah, just to put that it was also a great learning for me, because it was the first time for me to make the deliberation before the students other than CA as well as law graduates. Yes, before that, yes, I made the part in number of webinars, but it was the also first time other than CA and law graduate. Really great experience for me. Thank you to you, particular Mrs. Priyanka Anand, Dr. Priyanka Anand, to give me this opportunity. Thank you.
Thank you, CMA Amarpalji. Thank you so much.
Thank you, everyone. So formally, we wind up this meeting. Thanks for joining us.
Thanks for joining.